What's up, guys? We are live. Welcome to episode number 23, which is how do you make huge commissions in the business funding space? Going to be a lot of fun. Jillian, I think the volume is too loud. I can hear myself, and I'm very loud today. So if I'm coming off loud, give me a comment there and say, Leo, you're sounding a little bit too loud today. As you can see, today we've got just myself here as our friend and compatriot in the Go Figure podcast, Ty Talbot, did move yesterday. He and his wife to two boys, and boy, it was a fun late night getting them moved in, and what a great home that's going to be for their family. So he is still dealing with the move, but he should be back later this week for our next episode, which should be on Thursday. We'll have some good episodes for you. And we do, of course, have some new people are going to be coming in, interviews, 7, 8, 9-figure entrepreneurs who are going to be on this. So that's going to be fun. Jillian, am I hearing an echo, or are we just double-checking that there?
I have it on my phone.
Okay, perfect. All right, guys. So again, today's episode is how to make huge commissions in the business funding space. And it's going to be really a fun episode because obviously we're watching, what does the audience want? What does this channel want? And it seems to be pretty clear that everyone in this community is excited about how can I make and earn more money, take better care of my family, and do it in the business finance space, the business funding arena and profession. And that is what we're going to tackle today. So here's what's on the agenda for today's episode 23, how to make huge commissions in the business funding space. We're going to start right at the top with the very hottest program right out there in business funding, which is the ERC, the Employee Retention Credit. We had one of our partners, Dave Walk, on just a few weeks ago, and he unpacked this very powerful program. But I'm going to actually give you legit, one-on-one stories with some of the people in our community, some of the actual experiences we've had with this ERC program, how it is absolutely changing the lives of small business owners and helping them to either thrive or survive in 2023. So going to be very exciting. We're going to unpack the Employee Retention Credit. We're going to show how Doug, one of our funding CEOs, made $24,000. His strategy to do that. Francois literally earned 6 figures in 6 months with this ERC program. He's one of our OGs in the funding CEO community. And then we've also got Marie, who is actually Ty's wife, and she has this cool little strategy she's using to reach out to restaurants. So if you're in our Funding CEO Academy community, make sure you guys check in with us next Wednesday. We've got an awesome training in the CEO group with that. We're also going to talk about commercial real estate funding. How can you make a lot of money doing commercial real estate deals? We're going to talk about that time I helped an awesome gas station owner, Edwin. This was in San Diego, California, and a really long loan. Ended up making about $25,000 on that one deal. I'm going to unpack what commercial real estate funding can look like for you. We're also going to talk about a Silicon Valley tech company I got funding for. Was an enormous pain. I called it the loan from hell. It absolutely was. I'm going to unpack what that looked like, even though it did eventually lead to a $35,000 commission. We're going to talk about equipment funding. You can actually get paid a whole lot of money for funding equipment like cement trucks and big rigs and some of those big equipment pieces out there, what they term as kind of iron equipment, very expensive, and you can actually make a lot of money doing funding for equipment out there. So we're going to unpack that, take a look at what that looks like, and also look at you can actually finance airplanes. How much money can you make if you're financing an airplane? 10, 15, $20 million airplane is kind of interesting to even think about. Hey, you could actually do funding for someone who wanted to buy an airplane and see how profitable that would be. Ooh, Jillian, I feel like that is much better on my ears. My ears are thanking you right now, so appreciate that. And then we're going to talk about a big aha moment I had after really was about a year and a half when I first started in business funding, and everything was about, let's fund big deals, let's make big commissions. And I started to realize, wait a second, 95% of the business lenders and funders out there, they're all focused on all these big deals. Is it worth actually focusing on the big deals, or is there a case to be made where actually I could make a lot more money, a much bigger impact by helping a lot of small business owners, startups even, to get funding for their startup, get it off the ground? And we're going to unpack the reality of what's actually available out there for startups to get funding and how you can earn a great living, helping out startups in the business funding space. So we're going to talk about that, and we're going to talk about our good friends at the SBA, the Small Business Administration, that government-backed entity, of the different loans that are available out there. Maybe even talk a little bit about the history. It's just been unparalleled, the crazy stuff that's gone down in the last few years. We had, the P.P.P loan. We've had the EIDL loan. Now we have the Employee Retention Credit, 3 government-backed business finance programs that are unprecedented, that we have never seen, and we probably will never see again, especially if after all the government spending, the government's kind of getting to a point where they can't really spend too much more. They're never ever going to be able to pay it back, and that's going to create massive issues. So going to also, at the very end of this, we're going to unpack, all right, so what are the 2 ways you can actually make a great living in the business funding space? One, where you become the expert and you work directly with the lenders and you go all in, kind of with one of our funding CEOs, Damon. He did exactly that. He's built a big funding empire, 17 employees, great story. Or is it better for you to be able to kind of pick and choose which ones you want to do and, leverage our team and their talents to be able to, and our technology, to be able to get these deals done for you so you don't have to do all the heavy lifting and try and figure things out that have taken me a decade to figure out. Let us take care of it, and you can actually make more money and a lot more passive income if you kind of build it out that way. So we're going to see how my voice does speaking myself for the next hour instead of passing it off. So I may take an uncomfortable, water break, and my wife may talk to me later today and say, Leo, why? Why do you do that? Why do we have to listen to you drink water? Well, honey, if I don't drink the water, my throat might not work, and then the whole podcast will go downhill from there. So here we go. First drink of water. All right, good drink of water. Let's jump into the ERC, the Employee Retention Credit. This is a fascinating program, and a little bit later we're going to talk about the P.P.P loan and the EIDL loan, these government pandemic business loan programs that the government put out. But this Employee Retention Credit is really phenomenal. And for those of you who watch Shark Tank, and I bet a lot of you do, if you're part of this community, you're part of fintech, you're part of business funding, maybe you're one of our partners, maybe you're a coach, consultant, trainer, maybe you're just looking to get your money right with the My Figures app. However you got to our channel, the bottom line is this podcast is to help you get your money right. And a big part of that is increasing your income, right? At the end of the day, I love the example Grant Cardone gives. He talks about his mom after his dad died, and his mom literally, he said, would stretch the eagle out of the quarter using all the coupons and all the little money-saving techniques out there. And there's a lot of great people that focus on saving money. But as much as they focused on saving money, if they spent more time focused on earning money, that would actually solve a lot of their financial problems much quicker and lead to a much more enjoyable life where you're not clipping coupons for 50, 60 years. And so that's what he was talking about with her. So that said, if you're going to increase your income, the business funding space is a great place to do it. And right now we have this unprecedented opportunity with the Employee Retention Credit that maybe we will never see again. So let's just unpack quickly, what is the Employee Retention Credit and why am I talking about it? Well, number one, this Employee Retention Credit is not a loan, but it's actually a refund of some of the payroll taxes and a tax credit for any business owner who kept employees on in 2020 and 2021. And some of the businesses that were most affected, obviously, by the pandemic, you have restaurants, you have hotel and hospitality. People weren't able to travel as much. And so these business owners that kept employees on and were able to still continue, paying them W-2 hours and salaries, they're being rewarded by the government. The government did allocate all this money, but basically it's like, hey, you did keep them on, you did do the payroll, and you paid payroll taxes. Here's a refund, a tax credit essentially, and what it ends up being is checks that come in the mail to the business owner. So there's really 6 quarters that are available right now. You've got 2020 quarter 2, 3, and 4, and then 2021, quarters 1, 2, and 3. Those 6 quarters basically are the employee retention credit quarters. That's when the height of the pandemic was going down. And so the government's like, hey, if you kept people employed, God bless you, we're going to reward you. We're going to get you this tax credit for keeping people employed during that pandemic. Now, some businesses actually saw growth during that time. Some obviously saw a lot of pain. Either way, at the beginning, it was kind of like, hey, you can only qualify for it if you didn't take a P.P.P loan or if you saw a big reduction in the sales of your business. And so a lot of business owners, didn't qualify at the beginning, but then they updated the guidelines for this employee retention credit. And it was funny. I was watching this YouTube video, and clearly I got sidetracked here. But it had Kevin O'Leary, Mr. Wonderful, kind of the guy I think that holds Shark Tank together, makes it interesting. He's kind of plays that bad guy, like, always doing aggressive deals for the potential entrepreneur trying to get some funding and give away some equity for some money. Anyway, he was interviewed recently, and it was the darndest thing. He was interviewed, and he's sitting there talking about this ERC. And so he said this group approached him about paying him to be a spokesperson for them to offer the ERC Employee Retention Credit Program. And they were telling him about this program, and he's listening to it. He's like, what are you talking about? This isn't a real program. This can't be. It sounds too good to be true. This is bullshit. That's basically what Kevin O'Leary's saying. And at the end of the day, he does the research, does the, digs into this, and he finds out, well, actually this ERC thing is for real, and small business owners are getting 5, 6, 7 figures, sometimes in some rare examples, 8-figure refunds for this tax credit program known as the ERC. And so he's blown away. And so for the next 2 years, he's basically made this commitment, and probably good timing on his part, right? Because he just went through that FTX, Sam Bankman fraud, Friedman bullshit, whatever you want to call it, with FTX, where he was kind of an investor in FTX. And I think he had 14 or 15 million invested in crypto and money that they paid him. And of course, he lost that, most of it, when FTX went bankrupt just a few months ago, November 2022. And so, good time for Mr. Wonderful Kevin O'Leary to kind of transition out of that mess into, hey, I'm going to go on a crusade and help small business owners in the U.S. to access this employee retention credit. And so it's this amazing refund. And there's a few different ways that small business owners qualify. Number one is if you saw your revenues reduced by about 20% from 2019 to 2020, et cetera, 2021. So that's one way. The second way that you can qualify is if the supply chain was interrupted and it hurts your business, right? So you have inventory, you have products, things that are coming in, and the supply chain is interrupted, and it's just really hurting your business. Even if your business was growing, your business would have grown a lot more without those supply chain interruptions. And then the third, and really what I think is the most common way that small business owners are qualifying, is actually what's known as a full or partial shutdown. And I don't know one state out of the 50 states and the District of Columbia in the United States of America that did not have some kind of full or partial shutdown with your business. And so if your business did have that, and that led to you had to spend, you couldn't travel for your business, you perhaps couldn't have as many employees working, you couldn't have as many customers come into your business location, all sorts of different ways. But basically, if you were impacted with a full or partial shutdown, then you probably qualify for that ERC employee retention credit. And if you're not taking advantage of it, frankly, you're just being stupid. And I understand the cynicism, and you want to be careful. And I'd say probably the biggest reasons why people are scared of taking that ERC is, number one, they think it's too good to be true. And oftentimes, if things are too good to be true, they usually are, and you should not waste your time with it. So that's kind of one. But number two, they realize, okay, it's real, it's a real program, but I don't think I qualify, and I don't want to get in trouble with the government or the IRS, which is a very valid concern. And that's why it's super important you work with a group that has a really good fulfillment accountant CPA team to make sure you stay within the compliance of the guidelines and know everything. And so that might mean you only qualify for 4 of the 6 quarters, but are you going to complain if you get $100, $200, $300,000 in basically this tax cash check that comes in the mail just for you to use for your business or however you see fit? I mean, that's literally what it is. And so, yeah, you do want to make sure you stay within those guidelines and work with a reputable firm that didn't just pop up for the ERC, which is why we feel like we're in a good position. We've helped, thousands of small business owners, hundreds of millions of dollars in funding, and we have a great fulfillment team. And the reason we even set this up internally was we were using groups that were taking months just to get everything processed. And I said, there's got to be a better, faster way. We'll just do this ourselves. And that's exactly what we have done. So let's talk about some cool, exciting stories about some of the people in our community that are making a fortune with this employee retention credit. By the way, if you're watching this for the first time, you're like, oh my goodness, I need to get involved with this. I want to help small business owners and make a fortune doing it. I really feel like you got 6 to 12 months before it gets inundated and the opportunity is gone. So it's not a long-term strategy for your business, but it will build a lot of relationships and get you out there with a lot of clients that will lead to long-term benefits and more business funding, because businesses are always going to need access to money. And so it's a great time to get in there for short-term, money, cash benefits, build some relationships, and long-term, if you do a great job serving these business owners and these clients and referral partners, it's going to set you up to have a business in the business funding space long-term. So if you want to get your own link for sevenfigureserc.com/whatever your name is, business name you want to put, if it's ABC Funding, if it's Bob's Finance, or whatever you want it to be, email ty@sevenfigures.com, ty at 7figures.com, and we'll get you that ERC link so you can start sending in deals. The cool thing about working with us is, number one, we're committed to keeping the client in compliance. We don't want any issues for them with the government, with the guidelines of this program. And number two, we're getting those documents processed and sent to the IRS within a week, whereas most groups are taking literally 3 months. How do I know that? Because we were sending it previously to a group who was taking 3 months and still wasn't giving our clients timely responses, and it was just asinine how long it was taking. And so we have loved being able to set up our own thing and get it done quickly and efficiently for our clients and these small business owners. So here's an interesting story as I take drink number 2. All right, story number 1 with the ERC is Doug County. And Doug County was one of our new funding CEOs. He signed up in the summer of 2022, and he was kind of just getting started, and we started to kind of introduce him to this employee retention credit. And this guy has really worked hard and done a great job with this employee retention credit program. And so essentially he realizes this is a huge opportunity. To be honest with you, he kind of realized it more than I did early on. And so he goes out and he's like, well, I know these business owners have W-2 employees, so I'm just going to go basically knock on their door. And so he goes and he knocks on 150 business doors over a 2-week period, does it part-time because he has a full-time job. And of those 150, 5 tell him, yes, let's do this. And so he moves forward and he helps those 5. One of them ends up being a grocery store that's going to get a 7-figure refund, and his payout on this deal ends up being like $24,000 on one deal. When he told me that, and he'd gone through our program and learned kind of how to do marketing and build a relationship with small business owners, I was just so excited that, someone who just gets started in our program, goes out there, is earning a ton of money, is changing his family's life and being able to create a better life, an epic life for him and his family. Just super excited to see that happen. But I love the work ethic. I love the grind. For a guy who just said, you know what, I'm going to go out there and I'm not afraid of somebody telling me no, and I'm going to go knock on 150 doors the old school way, and I'm going to find businesses that want to take advantage of this program. And that is exactly what he did. And now he's, fast forward, I think he's probably done over six figures since he started working in our Funding CEO program and and he's very focused, right? He's like, I'm just going to do the ERC for the time being, and then as I build relationships, then I'll be able to, transition to more other types of business funding as things change and that program starts to get capped out and expires and is inundated, whatever you want to call it. But great story for a guy who changes his life, makes $24,000 on one deal, and like I said, probably has earned over six figures. I haven't checked in with him in a minute because he's so busy. But I know he's got so many deals in the pipeline, and he's definitely built a multiple six-figure pipeline of commissions that are coming in. So that's pretty exciting. That's Doug's story. Another one of our OGs in our Funding CEO Academy is Francois Story. Francois is just an amazing guy. He qualified for our Cancun trip that we took last April. It was. He and his wife came, and my wife and kids, we got to hang out with them. Great time in Playa del Carmen there. If you haven't been to Playa del Carmen, Mexico, I highly recommend you go there because it's a beautiful place. It really is paradise, and it's unique compared to any other tropical location because there's so many natural water parks where you can go, and you can go scuba diving and snorkeling and zip lining, and just an amazing place to hang out. So if you haven't gone to Playa, do yourself a favor and do some of these ERC deals with us and qualify yourself to just go to that beautiful location, take your family, and live that paradise dream. But let's talk about Francois. So he started in our Funding CEO programs it was the beginning, it was the end actually of 2021. So he started, was that when it was? Might have been, it was actually the end of 2020. Oh my word, it was a long time ago. So he actually got started in January of 2020. He was in our program that entire year of 2020, qualified to go to the Playa del Carmen trip in April of 2022. And literally in the last 6 months, he's really been very effective at working with this employee retention credit program and literally has earned six figures in just the last 6 months. He's been able to take care of some family members who have gone through some health scares, and just an amazing person, a magnetic person that you just want to be around and learn from. And we've certainly loved having him be part of our program. But that's a guy who has changed his life, his children's lives. I remember talking to him one day, and he's like, yeah, I'm going to go buy my daughter a car. She just got her driver's license. I'm like, man, you are a good father and a very big risk taker father. You never know how those kids are going to do getting their driver's license out there. But amazing dad, and has changed his family's life as a funding CEO. And we've learned a lot just working with him in our program. Another great story, and this is a recent one. And so if you're part of any of our Seven Figures Partners programs, in our Facebook group, part of Funding CEO Academy, we've got an amazing training for you next Wednesday. And next Wednesday, Marie, who is Ty's wife, so she's just a hard worker. I always say she's kind of the heart and soul of Seven Figures Funding. And so she decides, she loves helping small business owners and has been in the business funding space now going back to, I guess, 2017. So it's been several years that she's been in the space. Might even been the end of 2016. But yeah, it's been a while that she's been serving business owners. And so she was just thinking about some of the restaurants that she enjoys visiting and eating at, and just really realizing how much pain they've gone through. I mean, they were shut down so many times throughout the pandemic, had to transition from people eating in the restaurant to doing everything with takeout. And so she comes up with this unique strategy that she's going to share for us next Wednesday. And she finds a way to connect with these restaurant owners and help them. And she just barely sent one in. She's only been doing this for just a few weeks. And the business she just sent in is this awesome restaurant, 30 employees, probably going to be about $500,000 refund. And for her just sending that deal in, she's going to earn $12,000 on that one ERC deal just for making that connection. Our team does all the heavy work, heavy lifting. And just that's how powerful this program is. That's why we're seeing these huge commissions for just reaching out to these small business owners and helping them out And again, most of them don't know if they qualify, so it's certainly worth their time to find out. If they don't, we'll let them know, but most of the time they do. Maybe not every quarter, but to the tune of, in this case, this restaurant probably going to get a $500,000 refund for, just working and getting some documents over to our team to underwrite that for them. I mean, obviously worth it. And so right now, the number one opportunity to make massive, huge commissions in the business funding space is the ERC program. So again, if you don't know what this employee retention credit is, we actually have a playlist here on our channel called ERC Secrets in our YouTube channel. But you can also just email ty@sevenfigures.com. We'll get you your own custom link for Seven Figures ERC to just share that with business owners. We'll get on the phone, we'll educate them, explain how they qualify, get them pre-approved, and then do all the work for them. No upfront fees, and you get paid really well for sending those deals in. So email ty@sevenfigures.com and get your ERC link today, my friends. All right, that is the ERC, the number one opportunity to make huge commissions in the business funding space. Let's talk about commercial real estate funding. And I love real estate in general. We've invested millions of dollars in real estate. We've got B&B properties in Florida. We've got apartments in Dallas. We've got other properties here in Utah that we rent out, and everything we do is kind of cash flow based. It's not trying to flip it, but let's make money on the rents and let the property value grow, et cetera, et cetera. So I love real estate, and there are unique opportunities to do finance in commercial real estate. The first commercial real estate deal I ever did, this guy named Edwin, and he's literally from Jerusalem in Israel. Really cool guy. And he lives in San Diego, probably think he still lives there. And he's got this gas station there. He's owned it for a couple decades. And so his loan was, what happens with some of these commercial real estate loans is they're not like 30-year fixed loans most of the time like you get with your home mortgage. They're usually, when it's commercial, they kind of expire. They kind of are due within 5 years, or they go variable with the interest rate. And so you end up having to refinance them kind of like clockwork every few years as a business owner when you have a property with a loan like that. And so his was coming due, and then he had some other things that he wanted to kind of pay off. Kind of like the idea, like when you have some personal debts, maybe credit cards, car loans, or something expensive, home equity line of credit, you're like, I just want it all in one loan, and you kind of refinance your home mortgage, pay all those things off, and consolidate it to one loan. He needed to do that with his business and with his commercial real estate location, which was this gas station in San Diego. And so he'd been declined at the group I took him to, and I'm like, this is crazy. He like the property was worth like $4 or $5 million. He owed like $2 million, so there's no risk. He has a ton of equity in this property. I'm like, somebody's got to do this mortgage for him, this loan. And so I went out and I did the work, and I found a couple places that said they could do it. We went down the rabbit hole with him, got the appraisal, and with commercial real estate, like these appraisals are like $5,000. Like these are expensive appraisals. Your home mortgage appraisal might be $500-$600 depending on where you live. But boy, these commercial mortgage appraisals are $5,000-$6,000, and you pay for it up front. And then of course, there's no guarantee you're going to actually get the loan done. So it's kind of this big risk, kind of annoying. And anyway, we went down the rabbit hole. We put this file together, and I just remember being out on the lake with my family, and I had to take a call and get all these questions. Basically, the bank would it was just questions and answers and documents. By the end of the day, we easily had over 1,000 pages of documents and business financials and tax returns and net worth, all these different documents we had to put together to get this deal done. All in all, it was supposed to go through the SBA. At the last second, SBA declines it. Luckily, the bank stepped up with this California program, and we got it done. But I swear it took like 10, 11 months to get this deal done. I did make $25,000 on it. But because it took so long, it kind of led me to believe, maybe with all the time I put in on this, I actually made minimum wage because it took 11 months to get done. Maybe I would actually be better served, and I could help more people, serving more small business owners and startups instead of trying to do this big deal that literally takes 10, 11 months. So that's kind of a big paradigm shift when that happened for me. But that said, That said, let's jump into another story. And this one is not commercial real estate, but it's kind of a big commercial funding type deal and an interesting one. So this is with a guy who had a tech company in Silicon Valley there, and it was kind of early on with Facebook. And he was doing staffing, where he was providing engineers and staff, sales staff for Facebook. He was a staffing business. And a gentleman from India, really cool guy. And it was kind of interesting. He was kind of like the risk taker, and let's just spend all the money and take risks and build the business. And then he had this partner who was like the complete opposite of him, super conservative. No, we're not going to do that. So it was like the yin and yang. Perfect partnership. It was so funny working with these guys. But anyway, so he needed a business line of credit, and there was a lender at the time that no longer exists that we started working with. And they're like, cool, yeah, we're going to do, like $250,000 business line of credit and $250,000 loan. And so it'll be $500,000 together. And their business had enough growth. And I look back on it now as kind of a little bit aggressive for that lender, but they ended up saying they could do it. And so we started this process with them. And with it, we kind of had two deals where the lender was going to pay us, I think, like a 3% commission or 4% commission on the loan. And then we were also going to charge like maybe a 3 or 4% success fee that would come out of the loan, like closing costs and mortgage. And so we went to work on this, and everything looked good. And we got down to where, oh, cool, they're going to give us final approval and close it after about 6 weeks. I'm like, oh, this is so cool. We're going to make like $35,000 on one deal, 6 weeks of work, totally worth it. And at the last second, they did this check with the IRS, and the IRS was like, oh, no, son, you are not closing. You he owed like $100,000 or $150,000 in back payroll taxes. And what had happened, and this is actually a big, we'll call it a value bomb. If you're a small business owner and you're trying to do your payroll taxes on your own to save a few bucks, you're going to put yourself in a very dangerous position and jeopardize your entire business. So what this guy had done is he's like, I'm going to do my payroll taxes. And of course, what evidently happened was he actually didn't get them done. He's like, oh, I'll do it at the end of the year. All of a sudden, they were 2 years behind on payroll taxes, and payroll taxes add up. It's generally like 11, 12% of what your payroll is. So if you're doing $100,000 in payroll every month, you probably have $11,000 in taxes you owe to the IRS and the state. And he was in the state of California, so I think he had taken care of the state of California, but the IRS he had not, and the IRS was breathing down his neck. He actually had his own representative at the IRS because he owed like $200,000. I think it was actually closer to $200,000. And so I literally would get on the phone like a few times every week, and I'm negotiating back and forth with the IRS and the lender and my client, trying to figure out how he can get current and get them all these updated payroll reports. And this is how much he owes in payroll taxes, and just a massive nightmare. And so where I thought we were going to get the deal done in 6 weeks, well, 6 weeks soon became like 12 or 15. Finally, we got all that done. And then the other miracle is, well, will the lender, even agree to do the financing, because they want the money to go to the business owner so the business owner can grow the business, pay the loan back. But if all he's doing is paying back taxes, is the business really going to grow? That was kind of their question. And so I'm literally like negotiating back and forth, trying to make everybody happy. And finally, at the end of the day, it does get done. It takes a long time. It was a big deal, $35,000 on one deal for me at the time, a huge deal. This was back in I think early 2015, I believe. Yeah, it would have been early 2015 when we got that deal funded. So I was super excited, got it done. And again, as I'm doing these big commercial real estate or big business loans, they take a lot of time. And the weird thing is they literally die and get resurrected like once a week. Die, get resurrected. Oh, it's a dead deal. Oh, maybe we'll do it. It kind of goes back and forth like that. So super annoying. And you're always on pins and needles wondering if you're actually wasting your time or if this deal is going to get done. But you can make great, massive commissions on these deals. As another example, I know Francois did an apartment deal, made I think 24 grand on that. Earlier in 2022, that was an apartment deal that he did. And so there are great opportunities with commercial real estate. What it comes down to whenever you're trying to succeed within business finance or any type of finance space is the pre-qual. You have to be able to pre-qualify and know, do you got a contender or do you have a pretender? If you got a pretender, you've got to be very careful. You're going to waste a lot of time. And so it's the funniest thing ever. I'll see this all the time with someone who's new to business funding, joins one of our communities, and they're like, oh, I've got this client. They want $5 million. And they get all excited and they see the dollar signs and I'm going to make a fortune on this. But they forget it doesn't matter what somebody thinks they want or think they can get in funding. What matters is what they qualify for. So it's not about what they want, it's what they qualify for. And oftentimes, what a client wants and what they can actually qualify for are not the same thing. And so that is important for you as a business funding professional to understand if you want to dominate, make huge commissions, and build a real business that lasts in the business funding space. All right, guys, we've talked about the ERC. We've talked about commercial real estate. Time to transition to topic number 3, equipment funding. Equipment funding is an interesting space. And one of the big secrets, I think, in business of any sort is this Dream 100 strategy. And we've got a new funnel coming out that's going to be focused on helping business coaches, consultants, and trainers. So I'm really excited about that. We're going to be launching that tomorrow with our CEO training. But the basic idea is instead of you going out and just finding one client at a time, you know, it's kind of like the idea where you give a man a fish, he eats a day, teach him how to fish, he eats the rest of his life. It's the same idea. You can go out and find one good client, make a good commission, help that client, and that might be one and done, you're over. Or you go find a great business coach referral partner who can send you 5 clients every single month, month after month, year after year. Now you're in a much more prolonged and much more healthy spot financially and as business owner in the business funding spaces, regardless of what your business is. If you can have strategic partnerships where deals come in and you pay them a referral fee, and that doesn't take anything but effort and ingenuity to make that happen, that's how businesses are built, on strategic partnerships with that Dream 100 strategy that Chet Holmes made famous, the late, great Chet Holmes, Tony Robbins' business partner. So let's talk about equipment funding. So one of the first equipment funding deals I did was actually for a gentleman. He and his wife owned this business, and they had like these dump trucks, and they would just, they would use these big dump trucks to go and get stuff at big construction sites and take it to the dump and get rid of it, or just move things around at these big projects. Sometimes it was dirt, cement, whatever the case might be. And so they needed a new dump truck. It was going to be about $100,000. And it was super funny how this happened, because at the time, again, I was like, who was a great strategic partner? And I started thinking, who sees business owners every week looking for money and oftentimes tells them no? Bankers. I remember sitting down with a JP Morgan Chase regional representative, really cool lady. She'd been working for Chase for about 20 years, and she said that at each branch she would see maybe 20 people come in every week looking for money, and she was over like 5 or 6 branches in Salt Lake County. And so these 20 people would come in, and maybe 3 of them had a chance at qualifying. At the end of the day, maybe 1 or 2 actually got funded. So you're looking at like 10% or less of prospects who came into the bank to try and get qualified actually did end up getting funded. So 90% didn't. So that's a lot of people being told no. And if you've been at that bank a long time, they tell you no, you're kind of pissed off. Like, man, I've had my money there. I got car loans. How in the world can you decline me? This is bullshit. I'm taking my money and going elsewhere. And so I said, well, hey, what if you had a trusted partner you could send them to? You can look at our online reviews. We do a great job serving clients, and we can help them get creative financing options outside of traditional conventional bank financing. She's like, oh, that's really great. So she started sending us business. We had U.S. banks sending us business, Wells Fargo, and it was just kind of cool how it was starting to grow. So anyway, this couple in California, and my partner at the time, CJ, he basically had built some relationships with some lenders in the area too. And so this couple, the wife went to the credit union and the husband went to, I think, Bank of America. Of course, they turned him down, both of them, for the truck loan that they needed. But both of them said, hey, give this guy a call. And say they both had my card. And so both of them came home like, oh, no, we need to work with this group. No, and then it ended up being us, the same group. So I thought it was kind of cool how that happened. And anyway, long story short, it didn't take long. It was about 6 weeks. We got them the $100,000 truck loan. I think made $5,000 or $6,000 on that equipment deal. Usually you're making somewhere around 5-6% on equipment loan. And the cool thing is usually these lenders will actually pay you the commission because they're going to be making, their interest charges, which will add up to tens of thousands of dollars over the year. And so they have it built in their system that they'll pay you a finder's fee commission just for kind of bringing that deal in. And that's how a lot of these equipment deals get done, whether it's a big rig, whether it's iron equipment for massive construction projects or cement trucks. We've also done funding approvals for those. And obviously the big semi trucks that are going down the freeway, those semi trucks are super expensive. Like, $150,000, $250,000, $500,000 is typical. Like, these are big time expensive trucks, and so you can make great commissions getting those done, but you have to have the right lender contacts to do that. Again, that's what we've built out with our funding marketplace. It's just making sure there's an option. So if you're in our programs, you can work directly with these lenders and make a great living doing that. So that's equipment funding. Now, one of the interesting things about equipment is equipment entails a lot of things. And there's a group locally here that we work with that's part of our marketplace. And it was interesting to find out that they actually finance airplanes. So you can finance a $10, $15, $20 million airplane, and usually you make a 1% commission on that. And you're like, oh, it's just 1%. Well, hey, 1% on $10 million is a $100,000 commission on one airplane deal. So it's going to be very profitable just getting these done. And so a lot of it is just knowing, number one, that you've got a real lender who can get it done. Once you have that, then it's making sure you have a real client who actually has the ability to qualify and get that loan. And if they do, then that's where you can, do very well. And that's why it's, again, all about the pre-qual. Do you have a great client? And then do you have a great lender? If you can put them together, that's where you can make huge commissions in the business funding space. And very, very cool. Now, here's a story, actually, where I worked with, there was this concrete company that was growing super fast. They went from like 10 to 20 to $50 million a year, but they were really powered by a lot of debt. They weren't very profitable, but they owned all these cement trucks that were worth like, $4 or $5 million. And so I found this group out of Chicago that would give them a blanket loan for all of their trucks at once. It's going to be like $2.5, $3 million. And I think they were going to pay me like a 5% commission on it. So it was going to be this huge deal commission. And we got it all set up, and then they just didn't move forward. It made sense. I don't know what they ended up doing, but sometimes it happens, right? You work hard on one of these big deals, and then it just doesn't go through, and you're like, damn, I just wasted like 6 weeks of time, 25 hours on what I thought was going to be a $50,000 commission, and I'm going to make nothing. And that's one of the things where you start to realize it's so important that you have lead flow coming in every day. Way more lead flow than you think you can handle, because there's only a certain percentage that are going to actually qualify. And that's why it's vital that you have massive lead flow always, and you're always working towards generating more deals, more lead flow in your business funding business. So at that point for me, I'd really spent about 2 years where I'd been kind of focusing on bigger business deals, and certainly had seen some success with those. But at some point, there was this aha moment. I'm like, you know what? We can focus all this time on big deals that live and die. They're harder, they're fewer and farther between, and you can waste a lot of time and make nothing on them. Or what if we just helped a lot of startups and small business owners? The problem at the time was I didn't know what the best startup funding programs were, and so we started to really develop and hone in and partner up with groups where we could learn the best startup funding options. And at some point I started to realize, and I remember when I kind of went full circle with that, it was actually like May of 2015. It was the first time I went from having a home office to a physical office, commercial space office. And the last time I had a commercial space office was years earlier with the previous business. And so it was a big deal to get that commercial office space. And okay, we've got this rent payment due every single month, plus all of our personal bills. But I started to focus on just helping startups. And in month number 2, literally, we had $40,000 in sales and revenues come through that month. And that was a record by far. And it wasn't one client. It was like, 7 or 8 smaller clients that added up to that $40,000. And it was focused on serving startups and these small business owners that needed funding. And so I started to realize, well, actually, even though I'm making smaller commissions per deal, a $2,000, $3,000, $4,000, $5,000 on these startups, I can help a lot more of them. It's a lot easier. It's an easier qualification process. They don't, die and have to get resurrected every day. It's very, very simple, and you can move them forward, and there's high demand because the banks are going to tell them no 95% of the time. And so it was this really cool realization. And so I'm getting referrals from banks. I'm doing, online advertising, Google ad spend, and doing search Google, spend on that with some of the marketing. And we're starting to generate deals. And literally, as I kind of made that focus, hey, we're not going to turn any big businesses down. We'll get funding for you. But at the end of the day, we're going to really focus on kind of the newer small business owner and getting them funding. And by going all in with that, it really opened a lot of doors, and it made us experts in that space. And by December of 2015, we had our first 6-figure month, $100,000 in sales from funding commissions. And we helped probably 15 or 20 clients that month that added up to that $100,000. So you're probably making, anywhere from $3,000 to $5,000 per deal. You're helping a lot more clients, but it's smaller commissions. But at the end of the day, it ends up being a lot more money. So that was a big aha moment when I realized focusing all in on the startup and small business owners actually where you can make more money. And again, I've been watching, we've got videos here with thousands of views in them, and I'm starting to see that there is a hunger out there with our audience, with the YouTube channel, with maybe you're listening to us on the podcast platform. If you are, awesome. Check out the YouTube channel, 7 Figures Funding. You can look up my name, Leo Cannell. That's Kanell. And subscribe to the channel because you're going to get even more content above and beyond this Go Figure podcast that's going to help you to understand finances better, build your own funding empire if that's something you're looking at, or maybe just getting your money right, et cetera, et cetera. So back to the startup funding. I'm starting to learn, hey, there's a big opportunity here. And then as we start to go all in with that, then we started to see even more of a need out there because there are coaches, consultants, trainers, and their clients need access to money. And one of the biggest walls they run into is the money wall, where even if they have the cash, they aren't excited to, empty their savings account to invest in that coaching, training, marketing program because now they're going to be cash poor. And if it doesn't work out, they're going to be in a tight spot. So they always feel better at the end of the day, even if they have the money, if they could finance it, you're going to see a lot more success. And so that's what we started to build those relationships. And that's where you can help with a lot of startups to get funding. So that said, we've talked about the hottest programs out there where you can make huge commissions, right? We've talked about ERC. We've talked about commercial real estate, equipment funding, just regular business loans, etc. We've talked about startup funding. It's time to talk about one that's never been my favorite. It's the SBA, the Small Business Administration. Let me unpack a few of the different opportunities out there. So you've got the 7A, which is kind of the main loan. You can use it for a startup SBA loan. You're going to need collateral. You're going to need a down payment. Then you've got the 504 SBA program, and that's really for the big equipment, the commercial real estate, etc. The 7A can actually be used to buy a franchise. Let's say you're buying a McDonald's franchise. It's $1 million where you're going to probably need, anywhere from $100,000 to $200,000 down. There better be some equipment that's backing it up. If you watch that McDonald's movie there with Michael Keaton, great movie, by the way. And Ray Kroc, of course, built that McDonald's empire. The big thing that made it work was when they started to own all the real estate and they were leasing it back to the franchise owners. That gave them tremendous power and wealth to be able to build and grow McDonald's. So you still need to have assets to back up those McDonald's franchise loans, but franchise loans are great with 7A. So those are kind of the two main SBA products. There's a third called the SBA Express, which is basically a no collateral $150,000 loan, paid back over 10 years. Business has to have been in existence, usually 2-3 years, profitable tax returns to cover the new payment on the SBA loan, and you can't have too much debt personally either, or you won't qualify for that loan. So those have been the three programs for a long time with SBA, and now it's time for drink numbers. Is this 3, Julian? I think it's drink number 3. There we go. Brand new, and it's already leaking. Come on, Nike. Get your drink bottles right. So those have been the three main SBA programs, 7A, 504, and the Express. And then when COVID and the pandemic happened, well, these new programs popped up for business owners. And very interesting, these programs. The first one was the P.P.P. Of course, it's expired, exhausted, doesn't exist. There was P.P.P. loan, and then there was P.P.P. loan number 2. So we had these two types of loans. The first one was part of the CARES Act in, I think, March, April of 2020. It disappeared, but it was basically you were getting 8 weeks of payroll to keep your people employed, and it could also go to your rent payment. And then there was a second round of the CARES Act that was in early 2021, and that was P.P.P. 2. So those are done. Those were the payroll protection program because they wanted to protect your payroll, keep your employees on, which is great. It was very helpful during that time for everybody affected, which most people were as business owners. And then the next step was this EIDL loan, the Emergency Injury Disaster loan was kind of what that stood for. And it was Economic Injury Disaster, EIDL. Economic Injury Disaster Loan, EIDL. So this EIDL loan was this interesting loan that you could get. It was kind of based off of what your gross revenues and sales were as a business owner in 2019, and it started out at like I think it was $150,000, and then it went to $500,000, then it went to $2 million. But it was based on how much. So if your sales were less than $1 million, maybe you were getting a $50,000 loan, or a $30,000 or $100,000, whatever it was. But if your sales were, well over $1 million, then maybe you could get $150,000. And then they had all this government money, and they're like, oh, we got to give this money away to these business owners through these loans. And all of a sudden it went from, well, here, Mr. Business Owner, you started out with $150,000. Would you like $500,000? And then, oh, well, you're at $500,000. Would you like $1 million or $2 million? And so these were the loans that were out there. And really, small business owners should have only been taking those if they had very dialed-in investment processes where they knew if they invested in this and their business would grow. And hopefully that's what business owners did. Of course, I know probably a lot did not, and probably put in very high-risk things like crypto and other things that maybe didn't work out and are defaulting and on their way to bankruptcy, which is very, very sad and unfortunate. But so those are all the different options. And then, of course, the last final kind of SBA option out there, it's a big benefit, will come full circle, is that ERC, Employee Retention Credit, where you can get this massive tax credit refund. It's a cash payment coming in the form of a check from the United States Treasury Department. So if you're a small business owner, if you haven't got that yet, go to sevenfigureserc.com and make sure you tap into that program. That said, my friend, the SBA is typically a pain. They do have a new program out. So there is now a fourth program called the SBA Bolt. And where the Express, you had to really have your profit and loss dialed in to qualify and have enough cash flow. The Bolt loan is this program where it's just based on, hey, you get 30% of your revenue. So if you did $500,000 in 2021 business tax return, they might give you a $150,000 loan paid back over 10 years. Very cool. That's the SBA Bolt program. And so there are SBA lenders out there that will pay you 1 or 2 percentage points. So if it's like a $150,000 loan, you might make $1,500 to $3,000 on it. Maybe you have a service fee for preparing the documents and helping the business owner of $1,000 or $2,000. And so you can do a lot of those SBA loans and make a lot of money, but they are going to take typically 6 to 8 weeks to get done. And they can, obviously die and get resurrected multiple times, as SBA loans tend to do. So let's kind of bring this full circle, this episode here, which is making huge commissions in the business funding space, and talk about the two ways that you can do it. Way number one, you can kind of try and become the expert, figure out all the different lenders to send to. It's going to take a long time to build that out. You can join our Funding CEO Academy program. You can also, we have a live workshop Thursdays at sevenfigures.com/CEO, where you can register and learn more about our Funding CEO program. But basically, we give you all the training, access to all the programs so that you can build your own business funding empire. And then you don't have to figure out all the lenders yourself. You get a proven list of our contacts of lenders and what they specialize in, whether it's airplanes or semi-trucks or commercial real estate, apartments, or it's startup funding, or whatever it is, the type of loan that your client qualifies for, that's going to be available there. So there's kind of that option. The second option is, hey, I just want to be able to bring people in. I don't want to learn all the ins and outs and try and figure out what lender to take it to and the documents and sell it to the client. I just want to be the marketing person, find interested people, share my links, send them through, make a great living doing that. We have a lot of our funding CEOs and partners that do just that and do very well. One of them, for example, is Margie, who's become a great speaker. She speaks, she's a paid speaker at events actually across the world. She just had a speaking gig in United Arab Emirates. And funny enough, she actually said that she's on her way to Salt Lake this morning to a big business event and invited me to go down there. So we're going to go see Margie in person, which is going to be fun. She's been part of our Funding CEO program for a while, but a great example of somebody who has, this legit speaking, coaching business that she does for small business owners and people looking to grow. And she's added funding as this logical connecting part to it so that her clients have access to money. And she doesn't want to have to figure out all the ins and outs. She just wants to send it, earn her commission, move on to the next deal, and kind of focus on her core business at the same time. And so those are kind of the two different ways that you can do that. And again, if you're interested about learning more about Funding CEO Academy, you can go to fundingceoacademy.com or attend our class at sevenfigures.com/CEO. So all that said, guys, hopefully this provided a lot of value and details of the different ways that you can earn a great living in the business funding space, the commissions that you can make, and the strategies that are evergreen that are going to work to help you build your business funding empire for hopefully years to come. But again, I think I have to end this by saying if you haven't got your own 7 Figures ERC link so that you can help small business owners get that employee retention credit, please email Ty at sevenfigures.com so that he and the team can build you a custom link for your 7 Figures ERC link. And then next Wednesday, make sure you tune in to our CEO training. We're going to be having our different guests on that are going to share marketing strategies that are working. And one of our top sales guys, David, is going to be there to help you understand how you can connect your clients to him. Because sometimes the business owner isn't comfortable filling out that form until all the questions are answered. And so if you can get him on a phone call with David, he'll answer the questions with your client, get them submitted through you so you get credit and get paid. And that's what a lot of our partners are doing and making a great living doing it. Well, guys, if you have any questions, comments, make sure you comment. We will answer. If you have ideas, topics for the podcast or guests who are going to be in the Utah area, around Salt Lake City, Lehigh, American Fork, let us know. We are going to start having guests on in the next few weeks who will share their stories. So we're excited about that. Again, if you found value, make sure you subscribe to the podcast, share it with other business, finance, funding professionals who want to get their money right. And that, my friends, is today's episode. And we'll see you hopefully on Thursday for our next episode. What's that? Oh, good idea, Casey. That's our video editor. One more water break to end it off. All right, guys. That completes our water break in the podcast episode. We'll see you on Thursday. Ty should be back for the show, so looking forward to that episode.